Today we will see the accounting treatment in the books of transferee company, that is the second method, that is purchase method. So the accounting procedure in the books of transferee company differs depending upon the type of amalgamation, that is in case it is amalgamation in the nature of merger, then we will use pooling of interest method, and in case it is amalgamation in the nature of purchase, then we will be using purchase method. So we have already studied pooling of interest method, which is used in case the amalgamation is in the nature of merger. Now today we will see what is meant by purchase method and what are the journal entries in case of purchase method. Okay. So this method of accounting treatment is used for amalgamation in the nature of purchase. Now in India, most of the amalgamations are in the nature of purchase. For example, the amalgamation of Hindustan Lever Limited and the Brook Bond Lipton India Limited is an example of amalgamation in the nature of merger, because all the 5 conditions were satisfied. You know the 5 conditions to be satisfied in case we want to call amalgamation as amalgamation in the nature of merger. And in case of purchase, in case any of the 5 conditions are not satisfied, then the amalgamation will become amalgamation in the nature of purchase. But amalgamation of Hindustan Unilever Limited and Tata Oil Mills Limited is a case of amalgamation in the nature of purchase. That is 2 examples. One is an example for amalgamation in the nature of merger, and the other one is an example for amalgamation in the nature of purchase. So we will see what is purchase method and what are the steps or features. Now regarding the steps or the features in purchase method, the first feature is the assets and liabilities of the transferor company should be incorporated in the books of transferee company in either of the following ways. That is, at their existing carrying amounts, that is their book value. The purchase consideration should be allocated to individual identifiable assets and liabilities on the basis of their fair value also, that is revalued figures or market value. Okay. So in case of pooling of interest method, then the assets and liabilities of the transferor company should be incorporated in the books only at their book value. But in case of purchase method, the assets and liabilities of the transferor company can be incorporated in either of the 2 ways. One is at their book value and the other one is at their revalued figure or market value. Okay, so see the difference. In case of pooling of interest method, we will use book value only, but in case of purchase method, we can use either of the two values, that is either the market value or revalued figures, and in case it is not given, then we can use book value. Okay, so next is the reserves, whether capital or general reserve, capital reserve or revenue, or arising on revaluation of the transferor company other than statutory reserves should not be taken in the financial statement of the transferee company. In case of pooling of interest method, the reserves, that is general reserve, that is revenue reserve or capital reserve, it will be incorporated in the books of transferee company. But in case of, that is, it is stated that the reserves will be preserved, or the identity of reserves, whether capital or revenue, it will be preserved in the books of the transferee company also. So that was in case of pooling of interest method. But in case of purchase method, the reserves, whether capital or revenue, or arising on revaluation other than statutory reserves, it should not be taken in the financial statement of the transferee company. That is, the identity will be preserved only in case of statutory reserves and not in case of capital reserve or revenue reserve. Okay, you can understand the difference, I think. Okay, now next is the difference between the purchase consideration and the net asset acquired. So net asset, you know, that is the difference between the assets acquired and liabilities assumed. It represents goodwill or capital reserve. Okay. So the difference between purchase consideration and the net asset, it represents either goodwill or capital reserve. But in pooling of interest method, it was general reserve. Okay. If the purchase consideration is more than net asset acquired, then the difference should be taken to goodwill. and is debited in the books of the transferee company. If the amount of purchase consideration is lower than the net asset acquired, then the difference should be treated as capital reserve and is credited in the books of transferee company. So, in case of purchase method, the difference between purchase consideration and the net asset acquired, that constitute either goodwill or capital reserve. In case the purchase consideration is more than the net asset acquired, then that will be goodwill, and in case the purchase consideration is lower than the net asset acquired, then the difference will be treated as capital reserve. But in pooling of interest method, that was only general reserve. Next feature is the goodwill arising on amalgamation should be written off over a period of 5 years. And in case it is necessary, a longer period can be considered. So usually the goodwill arising on amalgamation should be written off over a period of 5 years. Next is, in order to preserve the identity of statutory reserves. So it is already stated that the identity of capital reserve or revenue reserve will not be preserved, and only the identity of statutory reserve will be preserved. So in order to preserve the identity of statutory reserve, it is essential to carry forward any statutory reserve of the transferor company, such as investment allowance reserve. So these are examples for statutory reserves. Okay. So investment allowance reserve, development allowance reserve, export profit reserve, project export reserve, etc. Okay. In the books of the transferee company for legal compliance, it is done by debiting amalgamation adjustment account and crediting statutory reserve account. Okay, so for this purpose, amalgamation adjustment account is created. So one account, that is amalgamation adjustment account, will be created. Now amalgamation adjustment account is shown in the balance sheet under the heading other non-current assets. Okay, so in order to preserve the identity of statutory reserve, we will be passing one journal entry, that is by debiting the amalgamation adjustment account and crediting the statutory reserve account. Now this amalgamation adjustment account, it will be shown in the balance sheet under the heading other non-current assets. Now, after the expiry of required time limit, when statutory reserves are not required to be maintained, then both statutory reserve account as well as amalgamation adjustment account, they will be cancelled by passing the reserve entry, that is debiting the statutory reserve account and crediting amalgamation adjustment account. So when it was created, the journal entry was passed by debiting the amalgamation adjustment account and crediting statutory reserve account. Now for cancellation, we will be passing the reverse entry, that is by debiting statutory reserve account and crediting amalgamation adjustment account. Now the purchase consideration under the purchase method is to be valued at a market price of shares issued by the transferee company. This is so because purchase method is concerned with fair value, but in case of pooling of interest method, the purchase consideration was calculated at par value. Because in case of pooling of interest method, everything was related to book value. But in case of purchase method, the purchase consideration is valued at market value because purchase method is concerned with fair value. So these are the various steps or features in case of purchase method. So one is the assets and liabilities can be valued either at their market value, and in case market value is not given, it can be valued at book value. Then the reserves, whether capital or revenue, the identity will not be preserved. Only the identity of statutory reserve will be preserved, and only the statutory reserve will be taken to the financial statement of transferee company. Then the difference between purchase consideration and net asset acquired, they will be transferred either to goodwill or to capital reserve. Then the goodwill arising on amalgamation should be written off over a period of 5 years, and only in case of emergency, a longer period can be considered. Then, in order to preserve the identity of statutory reserve, we will be passing a journal entry, that is by debiting amalgamation adjustment account and crediting statutory reserve account. Then, after the expiry of required time limit for cancellation, we will be passing the reverse entry, that is by debiting statutory reserve account and crediting amalgamation adjustment account. And as a last thing we can say, the purchase consideration under purchase method is valued at market price of shares issued by the transferee company. Now, the steps for accounting in the books of purchasing company under purchase method. First is calculating purchase consideration. Then second, calculate goodwill or capital reserve. That is difference between purchase consideration and net asset. So calculate goodwill or capital reserve by comparing the purchase consideration with net assets. Then pass journal entry relating to amalgamation. Then finally, prepare the balance sheet of purchasing company after amalgamation. So these are the 4 steps required in case of purchase method. One is calculating purchase consideration. The next is calculate goodwill or capital reserve by comparing the purchase consideration and net asset. Then pass journal entries relating to amalgamation. And finally, prepare the balance sheet of the purchasing company after amalgamation. Now, we will see the difference between pooling of interest method and purchase method. So, there are 2 methods, that is pooling of interest method and purchase method with regard to accounting treatment in the books of purchasing company or transferee company. Now, pooling of interest method is used in case of amalgamation by merger and purchase method is used in case of amalgamation by purchase. Now, we can see the difference between pooling of interest method and purchase method. Okay, so first is applicability. So, in case of application or applicability, amalgamation in the nature of, that is pooling of interest method will be used in case of amalgamation in the nature of. So, the first method, that is pooling of interest method, it is used in case of amalgamation in the nature of merger, and the purchase method is used in case of amalgamation in the nature of purchase. That is regarding application or applicability. First method, pooling of interest method being used in case of merger and purchase method used in case of purchase. Then next is incorporation of assets and liabilities. So all the assets and liabilities will be incorporated. Then in case of purchase, only agreed assets and liabilities will be incorporated. Okay, so in case of pooling of interest, all assets and liabilities are incorporated, but under purchase method only agreed assets and liabilities are incorporated. Then value of assets and liabilities. So it will be shown in the book value, it will be incorporated at their book value, but in case of purchase method, it can be incorporated either at agreed value or book value. Okay, so it can be used in either of the 2 ways, that is the value of assets and liabilities can be incorporated at book value in case of pooling of interest method, but in case of purchase method, it can be incorporated either at agreed value or book value. Then purchase consideration. In case of purchase consideration, we will be using par value of shares, but in case of purchase method, we will be using market value of shares. Okay, so under pooling of interest method, we use par value of shares, and under purchase method, we use market value of shares with regard to purchase consideration. Then aggregation of financial statement. All assets, liabilities and reserves will be aggregated, but in case of purchase method, only assets and liabilities agreed and statutory reserves are aggregated. You know, the identity will not be preserved in case of general and capital reserve. So only assets and liabilities agreed and statutory reserves are aggregated in case of purchase method. But in case of pooling of interest method, all the assets, liabilities and reserves are aggregated. Okay. Then identity of reserve. All reserves are preserved, that is the identity of capital reserve as well as revenue reserve will be preserved. But in case of purchase method, only the statutory reserve, that is the identity of statutory reserve will be preserved. Then goodwill or capital reserve. So no goodwill or capital reserve will be created in case of pooling of interest method. But in case of purchase, the difference between purchase consideration and net asset can be either goodwill or capital reserve. And finally, amalgamation adjustment account. In case of pooling of interest method, no such account will be created. But in case of purchase method, such account is opened for incorporating statutory reserve. So these are the points of difference between pooling of interest method and purchase method. One is pooling of interest method is used in case of amalgamation in the nature of merger, but purchase method is used in case of amalgamation in the nature of purchase. Then all assets and liabilities will be incorporated under pooling of interest method, but in case of purchase method only agreed assets and liabilities are incorporated. Then they will be incorporated at book value under pooling of interest method, but agreed value or book value in case of purchase method. Then regarding purchase consideration, we will use par value of shares under pooling of interest method, but market value shares under purchase method. Then all assets, liabilities and reserves are aggregated in financial statements under pooling of interest method, but only assets and liabilities agreed and statutory reserves are aggregated in case of purchase method. Then the identity of capital reserve as well as revenue reserve will be preserved, but in case of purchase method only the identity of statutory reserve will be preserved. Then no goodwill or capital reserve will be created under pooling of interest method, but in case of purchase method the difference between purchase consideration and net asset can be either goodwill or capital reserve. And the last point is the amalgamation adjustment account or an account called amalgamation adjustment account will not be created under pooling of interest method, but the amalgamation adjustment account will be created for incorporating statutory reserves under purchase method. So these are the points of difference between pooling of interest method and purchase method. Now we will see the journal entries. So it is similar to the pooling of interest method, but there is one or two differences. Okay. So for purchase of business, it will be business purchase account debtor, liquidator of transfer the company. Then for recording assets and liabilities, assets account debtor individually at agreed value, and in case agreed value is not given, then book value. Then to liabilities to business purchase, and the difference can be either goodwill or capital reserve. Okay. So the journal will be assets account debtor to liabilities to business purchase, and here the difference, in case the credit balance is more than it, there will be goodwill account, and in case the debit balance is more than there will be capital reserve. So that is the difference. So this goodwill account as well as capital reserve will be the balancing figure, and there will be only one item at a time. Okay, so either goodwill or capital reserve, not both. So this is the difference between the debit and the credit values. So there can either be goodwill or capital reserve. So two accounts will not appear at a time. So asset account debtor, goodwill account debtor to liabilities to capital reserve to business purchase. Now again, instead of these two entries, we can use one compound entry, and it can be asset account debtor, goodwill account debtor to liabilities to capital reserve to liquidator of transferor company. Okay, so instead of passing these two entries, there can be one entry, that is asset account debtor, goodwill account debtor to liabilities to capital reserve to liquidator of transferor company. So this is the entry. Instead of writing two entries given above, one entry can be written, that is asset account debtor, goodwill account debtor to liabilities to capital reserve to liquidator of transferor company. Then for payment of purchase consideration, liquidator of transferor company account debtor to bank to share capital to debentures. In case it is issued at discount, then this discount on issue of shares will appear, and in case it is issued at premium, then security premium will also appear. So the normal entry will be liquidator of transferor company account debtor to bank to share capital to debentures. In case there is discount, it will be debited, and in case it is issued at premium, security premium will be credited. Then for recording statutory reserve. So this is a different entry when we compare it with the pooling of interest method. So this is one additional entry, that is for recording statutory reserve. For recording statutory reserve, the journal will be amalgamation adjustment account debtor to statutory reserve. So amalgamation adjustment account debtor to statutory reserve by name. So that is, we should specify the name of the statutory reserve. Then for payment of liquidation expense, goodwill account or capital reserve account debtor to bank. So this depends upon the difference here. That is, in case the difference is goodwill, then we will be using goodwill, and in case the difference is capital reserve, then we will be using capital reserve. So this entry depends upon the first one, that is, in case there is goodwill account as a difference, then goodwill account debtor to bank. In case the difference is capital reserve, then it will be capital reserve account debtor to bank. So this is for payment of liquidation expense by the transferee company. So goodwill or capital reserve account debtor to bank, and this depends upon the first entry. That is the difference between purchase consideration and net asset. Now for payment of formation expense, preliminary expense account debtor to bank. Now for writing of goodwill, capital reserve account debtor to goodwill. So the goodwill will be written off within 5 years. Okay, so for the purpose of writing of goodwill, capital reserve account debtor to goodwill. Then for discharging of liability, if any, then liability account debtor, that is, it should be written individually. So liability account debtor to bank or share capital or debentures. Then in case there is any fresh issue of shares and debentures, then we will be using the usual entries, that is the entry for application money, then allotment money, call money, and so on. So all the usual entries will be written for fresh issue of shares and debentures. Then finally, for writing of statutory reserve, the reverse entry will be passed, So statutory reserve account debtor to amalgamation adjustment account. So these are the journal entries. So first entry for purchase of business or purchase consideration due. So we can write either purchase consideration due. So business purchase account debtor to liquidator or transferor company. Then for recording assets and liabilities, assets account debtor to liabilities to business purchase. Then the difference can be either goodwill or capital reserve. So instead of writing these two entries, we can replace this business purchase with liquidator of transferor company, and the entry will be asset account debtor, goodwill account debtor to liabilities to capital reserve to liquidator of transferor company. So this is the entry. Then payment of purchase consideration, liquidator of transferor company account debtor to bank to share capital to debentures. In case there is discount, it will be debited, and in case there is premium account will be credited. For recording statutory reserve, amalgamation adjustment account debtor to statutory reserve. Then in case the liquidation expense is paid by the transferee company, then the entry will be goodwill account debtor or capital reserve account debtor to bank. Then payment of formation expense, preliminary expense account debtor to bank. For writing of goodwill, capital reserve account debtor to goodwill. Then discharging liability, if any, liability account debtor to bank to share capital to debentures. Then for fresh issue, all the usual entries regarding application money or receiving application money, allotment money, call money, etc. will be passed. Then finally, for writing of statutory reserve account debtor to amalgamation adjustment, that is the reverse entry when the statutory reserve was incorporated. Okay, so that's all regarding the purchase method. Thank you.